Hey, good afternoon, everyone. It's Denise Donahue, the mortgage nerd, also part of the Leslie McGiven group. As you guys know, every single week I bring you guys a rate update about what's going on with the rates, what's happening, where's it trending, all that good stuff. So, this week's update, we're going to take a look at the bonds like we always do. For those of you who are new tuning in, what you're looking at on the screen right now is the bond market. No, I don't expect you guys to be little nerds, but what you do need to know, especially if you're in the market to buy, is that when the price of a bond is high, interest rates are low and vice versa. So what you're looking at is a span over the last 2 months. What I want to show you is this line is very up and down. Yes, interest rates do fluctuate every single day. That's because bonds trade a lot like the stock market. So no, your loan officer is not pulling your leg. It legitimate is true. So you can see here we had another great week. You'll see that we have a little bit of a line going upwards. That means that rates have fallen a little bit. If you take a look to the left on our website, we post what Fannie and Freddie are lending to the banks at right now. So you'll see here that as of July 5th, the 30-year rates, Fannie and Freddie were lending at a 4.52% with a half a point of fees. And the chief economist, Sam, will leave a little commentary. I'll let you guys take a look at that. But this is posted live on our website, so take a look at it under mortgage rates. And if you have any questions, let us know. The last thing I wanted to show you guys was a lot of people think right now that you get a higher interest rate break when you put 20% down than if you were to put 10% down or 5% down. And I'm here to tell you that's not true. I know it sounds crazy, but you can actually Google this. If you go to Google and you type in Fannie Mae LLPA, this is the secret sauce that nobody knows about. But if you click on the PDF, it's going to show you exactly what these adjustments are. And at the top of page 2, you'll see that it's going to show us what the break is when it comes to percent down. So let's take a look at this. If you have a 740 or above credit score, these columns look at the total percent finance, because as a lender, we care about how much we're lending. You are more concerned with down payment. So if you have a 5% down payment, that means you're in this column here because you're financing 95%. The rate adjustment that you'll see is 0.25. If your credit score is a little bit lower, that adjustment goes up because you're considered higher risk. If your credit score is a little bit lower, that rate goes up anymore because the adjustment's higher. But take a look at this. If you have a financed amount of 80% or 20% down, look, your adjustment is actually higher. Why? Because the banks can't charge you that PMI insurance. So if you don't get that next break until you put 40% down. So take a look at this chart. That's kind of a myth buster I wanted to tell everybody today. I've gotten a lot of people say, well, I've got 740 credit, 20% down. I thought my rate would be lower than that. Well, this is why. Google Fannie Mae LLPA. Take a look at it yourself. You don't have to take my word for it. Thank you for tuning in. If you guys have any questions at all, go to the homepage of our website. You can call, email, or text. We provide mortgage loans in Texas, Colorado, and hopefully Arizona very soon. Thank you. Leave any comments. Thanks for tuning in. See you next week.